How are you doing today? Here's the thing. Got a situation in the world right now. Markets are everything about confidence. For the last, let's see, the last few years, the markets have been going up and up and up based on stimulus from the Federal Reserve, quantitative easing. And what's happened is over these years, because of the increase in the markets, it's had a few times when the markets has fell off, had sell-offs in the market. It's always bounced back higher than ever after. What it's done is it's created a certain feeling within investors within the market that nothing can ever go wrong. It's made a feeling like bad news is good news, and the market will only ever go up and up and up forever. And so they've got this mentality that they've built up over a period of years where when the market dips down really low, they buy in and then everybody makes a lot of money. And so right now, yeah, the news is bad, okay? But they've heard this bad news several times before. They've seen the market fall 1,000 points before, and then the market always goes higher than ever. And so a lot of them are thinking right now in their heads, they're thinking, hey, this is just another dark cloud going over the market, and once it's gone, the market will shoot up way high again and I'll make lots of money. So they're in there and they're buying. They're buying into the market. It's a mentality, it's a confidence model that's been set up over a long period of time, this confidence model. And this confidence model is giving the market an awful lot of confidence. It's one of the reasons why I call this a Teflon market. Here's the problem. Investors haven't realized it yet. It hasn't really sunk in. This time it's different. There's a number of factors that's making it different this time. The market has rolled over, not big. Now, other times the market rolled over bigger than it has this time. Investors didn't lose confidence. This time, what's going to happen is in a couple weeks or maybe a month or so, it's going to start to dawn on them, hey, we are entering into a new paradigm. We're undergoing quite literally right now a paradigm shift. The shift is being caused by what's actually happening in a breakdown of the very fabric of world trade. Right now, we've been in a pattern of world trade that gave us good times, expanded the credit, expanded the monetary supply, and gave us good times for a long time. This credit expansion and this period that we were in, where the world had a lot of just basically almost like free trade. It's just like trade moved back and forth in the world, almost like a circulatory system in the body. And a man, say you had a man, say he lived his life, and for years and years he had a good circulatory system. And then all of a sudden something comes along and breaks down his circulatory system where he gets poor circulation, old age or whatever. Well, that's the way with the world's economy. We've had a good circulatory system. The circulatory system is trade going back and forth between China and America and between all these other countries. And this is what's built China into what she is right now, is trade with America. All of a sudden, a giant wrench has fell down into the cogs and gears of this world economy. And what's happened is the market hasn't really caught on yet. This feels to the market kind of like these last few little bumps that we've had in the market, where the market will fall off 1,000 points or whatever. And they're in this mindset, well, we'll get over this and then we'll move on. The market will go higher and ever and we'll make lots of money. It hasn't really sunk in yet that that's not what's happening. What's happening right now is a breakdown of the entire world trading system. We got Japan and South Korea all of a sudden got a breakdown in trade. We've got an enormous breakdown in trade. The biggest breakdown in trade of all is between the United States of America and China. Now, America's labeled China a currency manipulator. This is very important. They have laws that were passed. I think, what year were those laws passed? I think it was it 1988? Anyway, I was studying it last night. Getting to the crux of the matter is, the United States, when they label China a currency manipulator, these laws can, and not necessarily will, but can come into effect, where the ultimate conclusion of these laws is the United States could actually levy sanctions against China. And this trade war can get a lot worse than it is now, and it probably will. There's two things the Chinese haven't done yet. One, they haven't sold their $1.1 trillion in U.S. Treasury bonds. Okay? Haven't done that yet. Next thing they haven't done is they have not cut off the supply of rare earth minerals. Haven't done that yet. Now, what have they done? They have devalued the yuan moderately, and then they stopped. That's when the market fell over 700 points, when they devalued the yuan. Suddenly they stopped. The yuan started to bounce back a little bit. That was like a warning. That's what it was. The next steps China will take will be the rare earth minerals, will be the $1.1 trillion worth of U.S. Treasury bonds that they can dump into the market. We see Treasury yields spike, go up. You know, they've been going down, down, down. We've seen Treasury yields. People are running into Treasuries big time, buying up Treasuries. You have any idea out there how big the U.S. Treasury market is? It's like 100 trillion size market. It's bizarre, you know, almost like bizarre, like, you know, when we consider what Deutsche Bank has in derivatives. Of course, you know, the nominal value on those derivatives is not what the exact same value is as like $45 trillion, but the nominal value is different. It's the way derivatives work is they sort of cancel each other out to a certain degree, but still, it's enormous. And if that were to, say, Deutsche Bank were to roll over and Deutsche Bank were to collapse anytime soon, well, the reverberation from those derivatives would go into the financial system, and it would act like poison going into these banks in the United States that are connected to those derivatives, because they have their own derivatives books, you know. So one derivatives book, a huge derivative book like Deutsche Bank's, can go in and actually trigger these other derivatives books to fail within these other banks, creating enormous problems within the financial system. Anyway, listen. What I'm expecting is, I'm expecting the markets to actually quite literally dawn on them in a week or two, or 2 weeks, or 3 weeks, as this thing intensifies. And the next pulse in the market is going to be a fundamental sell-off. It's going to dwarf what we've just seen. And that's when investors are really going to get scared. Frightened. They're not frightened yet. They're not really frightened. What they are right now is, what's the word I would use for it, for investors out there right now? Their confidence is shaken, has been shaken a little bit. Not a lot. They're a little bit nervous right now. And they're going into gold and silver a little bit. Well, they're showing you where they're going to go, guys. Look at the price of gold and silver. Not so much crypto.